All right, welcome to the daily market recap for Wednesday, November 19th. In today's video, I'll be going over the action from the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off, it was the day before NVIDIA's earnings, and we had another kind of rally in the morning, uppercut and failure of the resistance gap, the 5-day, and right near the 50-day moving average. A big sell-off from there, and then a late day bounce. Now, after the fact, we know that NVIDIA has beaten on earnings and sales expectations. They're up about 5% after hours, and the market itself is also rallying right up to that 606 level as I'm taping this right now. So right by that 50-day moving average where we failed at earlier today. Whether we get a sell the news event tomorrow, that would be really a sign of risk off action. But today, I probably felt the most bearish that I felt the entire way down. And I noticed that I felt that way and was also looking at the price, noting that we weren't making new lows. And when that happens, when I do like feel the most bearish, but we're not taking out the previous lows, that's usually a sign that we're going to bounce. It doesn't mean that we're going to go right back to highs, but a technical rally, kind of 2 to the 10-day, even to the 20-day moving average, right around 612, would not be a surprise over the next couple days. S&P 500 up 0.4% today, also with that morning kind of uppercut of the 5 in the resistance gap. Sell off later in the day, and then or sell off midday, bounce into the close. IWO, the growth stocks of the Russell 2000, higher highs and higher lows today, actually up 0.3%. Was also up yesterday, kind of a sign that sellers were subsiding there. ARKK down 0.64%, still kind of in no man's land below all the moving averages, which are declining, the 5, the 10, the 20, and the 50-day. And then switching over to Bitcoin, we saw another lows. So after we bounced yesterday, we had more fear in the market today, shook out yesterday's lows, shook out that 90K level again, and immediately responded and bounced. And typically when you see these like two long lower wicks that like just take out the previous low, that's usually a sign after an extension down that you are going to snap back. So my guess is a little bounce back, at least to the like 99K level, just below like this previous support here at the 20-day EMA over the next couple sessions would not be surprising. But overall, that could still be another lower high. We could still be in a major downtrend. I just think shorting at this point, also, if we zoom out, this was kind of like a breakout retest of the move back in April. Shorting right down here, probably not the best move. Whether we get the snapback that high or this is like a weaker bounce, we'll only know in hindsight, but nice little undercut and rally today. Ethereum, kind of the same thing, just recaptured the 3K level after taking out yesterday's lows. So probably an oversold bounce in some of these crypto names as well. Getting to the liquid leaders, we saw 6 out of 9 of them up on the day. Again, kind of a sign that the market was ready to bounce. LITE up 8.7%, new all-time closing high. Extremely strong action here on a pickup in volume after a nice gap up 15.8% for the week already. Lots of strength in LITE. Google dominated the headlines earlier today. At one point, it was up like 5 or 6% with massive volume with a gap up. It did kind of close relatively weak because the market came in so much. But this is here. Let me switch and add the active or the live price, excuse me, so we can see the after hours. So Google after hours is right back at that $300 level. Really good reaction with NVIDIA's earnings. Eli Lilly, another all-time closing high and just massive amounts of accumulation here. Healthcare related themes continues to be the strongest theme in the market, and this is the liquid leader within that theme. WDC and some of these other memory names, a little shakeout today to the 20-day moving average, the support gap, and the high volume close from earnings. We held that area, and we're now gapping up 10 to 160, so kind of right below this previous gap zone. Nice little flag into the 20-day EMA. I thought it was the last group to break or the latest group to break down, and still we might uppercut and fail at this gap zone, but There's a lot of these memory names that are just pulling back to their 20-day moving average for the first time. And if the market does go into kind of a multi-day rally instead of a sell the news event, these could probably rip into new highs. Apple uppercut and fail at that resistance gap, now trading just under those previous lows. SNDK, another one in that memory name, inside candle today on lower volume, still held the support gap and the 10-day moving average, the strongest in the group. And that's trading at 259 after hours, so a little bit above today's high. That was up 0.4% today. First Solar continues to get stuffed right at this 257.80 level, 4 days in a row, uppercut and fail right at that area. So a close above that could signal that this is a higher low and we're ready to get going again. MU, another memory name that came in, undercut and reclaimed the support gap low, closed well, and then is up to 234 after hours, so right by the 5 and the 10-day moving average. This was on the watch list coming into the day at this key level, and I just didn't take the trade. So maybe one that I kick myself for after it gaps up, but you're not going to take every single trade, but this was a nice one to have on the watch list. Getting into the industry ETFs, nuclear and uranium both bounced today. So NLR is that combined theme. Nuclear bounced with some news. Oklo, LEU, really good price action there. And then after hours, we're seeing continuation because if AI is going to continue here and NVIDIA needs, or AI needs all that power that NVIDIA is requesting, then nuclear might be an option to power that. Semiconductors undercut the 50-day moving average, closed below it yesterday, unfilled gap up today, reclaimed the 50-day on a closing basis, and now is trading up at 350. So all the way back above all the key moving averages, the 5, the 10, the 20-day. Again, is this like usually the first test of the 50-day moving average after making new highs is a good risk reward spot. It was tough because going into NVIDIA's earnings, do you really want to hold that overnight risk? But big shakeout yesterday and then a nice gap up overnight. A couple other themes to talk about. XLF, the financial ETF, really ugly action last or on Monday, followed through a little bit lower on Tuesday into this 200-day moving average. And today we put in an inside candle. Hopefully we bounce here and we don't just follow through. It would be a really bad look for the market if we lose financials altogether. And so far we have put in like lower high, lower low. So it's technically in a downtrend, but hopefully we can get back up into an uptrend and maybe this is like a double bottom base. Let's see. Home builders still extremely weak, flat on the day, still below that 200-day moving average. XRT down another 0.5% into the 200-day and the support gap. We did bounce at that level, so hopefully that is the low of this pullback, and then we can get going. Biotech, love the action today out of biotech. Inside candle on very low volume, above the 5-day moving average. Double inside candle while the market had pulled back, and then some names bounced, but biotech and healthcare, XLV, really, really nice consolidation over the last couple of days after the market's been extremely volatile. But this is true accumulation of an emerging theme, and you could not ask for better relative strength while the market went through that choppy phase. XLE, first test of the 20-day moving average after like new closing highs for the or for at least the rally. Usually a good risk reward spot. Came into the 50-day intraday and then bounced. I did pick up PBW or PBF as one oil and gas name. And then KWeb was really bullish on the Chinese equities. October 10th, we had our kind of breakout retest. We bounced and then we took out that low. So to me, this is still in a downtrend until proven otherwise. Not a theme that I want to be focusing on. Before we go into the long and the short setups, we do have NVIDIA's earnings report. They beat on earnings, reporting $1.3 per share, where the estimate was 1.18. They beat on revenue, $57 billion versus 54.6. And if we go back to Deep View and take a look at the earnings, we could see NVIDIA of 4.8% after hours. A couple other earnings beats, or at least pops on earnings. CRNC up 30.2%. Oddity up 25.4. You can see I have not looked at this chart in a while because it's been in such a massive downtrend. Um, KLIC up 14%. PAMW was the only other name outside of NVIDIA that I was like actually interested in looking at. And this is down 7.4% back into that 200-day moving average. So NVIDIA looks to be holding up the market. And after everyone got bearish, again, including myself, I don't think I've felt more bearish since like the April lows. And when we weren't making new lows after that kind of feeling, it kind of told me it was time to bounce. Whether it's a 1 day bounce, a 2 day bounce, 3 day bounce, I don't know. I still see a lot of damage in the overall market, so I'm not just like rushing into names. I still think some oversold bounces are the better trades versus trying to get positioned for long-term trends. Still going to be a very volatile market, but hopefully we've put in at least an intermediate low on this pullback. So on the long side, the first two are oversold bounces. The first one is Coinbase, and this is going back to like just crypto in general. Ethereum undercutting and reclaiming that 3K level. Bitcoin undercutting yesterday's lows and the 90K level, reclaiming that. Coinbase was in this monster downtrend, got really extended, and actually started snapping back before Bitcoin and Ethereum did. So some relative strength on that U-turn, and that's usually like the stocks that I want to trade. If I'm trying to play an oversold bounce, is the strongest within the group. Um, right now, we're trading right at today's high, so depending on where we open, right, we don't want to chase it if it's like gapping up like crazy. But taking back today's high would be the buy spot, and then just use a 2 or 3% stop. And with these oversold bounces, any type of mean reversion play, if you're trying to play an oversold bounce or if you're shorting an extended name to the upside, always say always stay on the side of the daily VWAP. If you're trying to play an oversold bounce, you want price to be above the daily VWAP. At least get today's buyers in the money. If you're trying to play these snapback rallies, if you can't hold over today's daily VWAP, everyone is underwater on the trade, and you have more likely of a chance to continue lower. So Coinbase just through today's high would be the buy spot. Use a 2 or 3% stop or a stop below VWAP. MSTR, I thought yesterday was going to be the bounce. I got positioned in it, just a 5% position, got stopped out today. It was up 5.8% yesterday, and then today just even more volume on the way down 9.8%. If I can zoom out here, you can see that this is the highest volume on the downside this entire move since really like the blow off top action back in December, which again, like you see tons of volume typically at turning points when everyone gets extremely emotional. The best time to short this was the failure at the 200-day moving average, not when it's already extended all the way down here and we're seeing volume pick up. So uh, I don't know where Bitcoin will open up tomorrow. A couple different ways to play this is a gap up and then an opening range break, stop under the daily VWAP or 3%. So if you rally up and then the daily VWAP is within that 3% threshold, that's your trade. Or if Bitcoin does sell off further and we get like another candle down, I would look at this support gap where we bounced today, just an undercut and reclaim of today's low. I don't see that happening because we're trading at 193.60 right now, so kind of gapping up right around yesterday's close or yesterday's open, excuse me. So gap up, opening range break would be the trade there. SNDK, I thought we were rolling over here, held up relatively well, even though like this was down 14% at one point on Tuesday. Bounced back, closed well inside day today on lower volume. It's a theme that like really hasn't broken down. It started to show some cracks while the market got heavy, but SNDK only pulling back into the 10-day moving average. We saw MU undercut and reclaim the support gap below the 20-day. We see WDC right on that 20-day EMA and the support gap. And then STX, same kind of price action. That's trading at 270. So a pretty large gap up here. So that theme was kind of the last one to start feeling heavy, but it doesn't feel like we've had enough damage here where like we can't break higher and make new highs. Depending on where we open tomorrow, a break over today's high could be buyable. Stop at the support gap low. If we gap up too much, I'm not going to be chasing it higher. That first burst, let it kind of build out a daily range, and then take you could take it on like a 5 minute or 30 minute um, daily range break. It's going to be a little tricky because like there are these gap zones here. If the market does need liquidity and we see a sell the news event on NVIDIA, which again I don't think we will, just because everyone was so bearish. I was so bearish. We had a bunch of things bouncing at key spots. I don't think it's just going to be a sell the news event tomorrow. Um, but if it is, like these gap zones are where we would probably run into trouble with SNDK. But still, I want to trade the strongest stock in that group. So MU bouncing was good evidence that, hey, maybe the sellers are done here. STX and WDC holding those key levels, good evidence. But the one that I want to trade is SNDK because it's been the strongest, hasn't even tested the 20-day EMA, held the support gap the last like 5 days of chop here. And that has the highest likelihood of getting into new highs. GEV, I almost put this on the watch list yesterday, and didn't, and I don't have a position in it right now, but I don't think it's really buyable at this point, but it's a name that I want to keep a really close eye on. Um, because of how we've acted around this support gap, where we bounced once back in July and then multiple times recently. Yesterday, we had kind of an ugly close under the key moving averages and an ugly close followed by a gap up that opens right near the low of the day is a great sign that the trend has started again to the upside. Now, that doesn't mean we go straight up. I think the market's going to stay volatile, so we're going to see some like chop action higher, then pull back lower. What I would be looking for is either like a rally above the 50-day, and then as we pull back into what would be a rising 20-day EMA and the 50-day moving average right on top of each other, the $600 level would be a spot that I would be watching. Not a super clean setup right now. Not going to chase it higher tomorrow, but it has to be a name that you keep on focus. Some other energy names for solar. We covered this on the leaders. We have four daily highs right at the same spot. The market's just starting to bounce now. That's the only time like I would be willing to buy something on strength. So through that pivot high is buyable. Stop at today's low. NXT, another energy name, another solar name, inside candle day on very low volume. First test of the 50-day moving average, bounced at that support gap and the 50-day. From there, three candles consolidating, bouncing at another support gap. Through today's high would be buyable. Stop under yesterday's low. It's a little bit wider of a stop, so position size much smaller. And then CSIQ was the trade today to take, just 100% move on extremely high volume. First pullback in the 20-day moving average support gap test and a key round number of $25. That was a do or die spot, and we had some nice action there. If this does pull back kind of into that area on market weakness, that's a spot that I would try again. I do have a position in this already, but I would kind of add to it if we get another pullback into that area. GMED, extremely tight price action. Kind of feels a little too tight, but it's in the right group. Healthcare equipment was up 36% on earnings, followed through one day, and then has just traded sideways since. A recapture on the daily view app would be buyable, but because it's so tight here, I really want to see just a shakeout of the last 3 days lows. Reclaim those lows at 82.70. That would be the entry, and then your stop would be the low of November 14th and maybe the 10-day EMA, depending on how much you want to risk there. TMDX, this has been a very choppy chart, and I don't see a super clean setup right now, but it's another one that I think you have to keep an eye on because it's in the right group. It has the ability to make some pretty crazy moves, and this is a really quality base. Higher low, higher low, higher low, higher low. And then on a day that was like pretty weak overall in the market, this was up 14% with a nice gap up. So eventually, what I would want to see is like a day or two pullback, and then or a large gap down. I don't think we're going to see that tomorrow, but a gap down, build out some higher lows intraday, and then recapture the daily VWAP as the entry. So I've got some alerts around this like 130 area. but I'll be patient with it. It should build out another pivot. Otherwise, it'll go without me. Oil and gas name, PARR, first gap down today. What I would be looking for in with any oil and gas names, you never really want to buy them on strength. You always want to buy them on like pullback. So pullback into this 20-day moving average, the gap zone, and a kind of breakout retest at this 4150 area is the spot that I will be trying. And then BU, very light trading name, only $30 million a day. But nice pop from $3 up to $7. Extremely tight price action the last 4 days. This would be a performance booster, just trading it through the pivot highs at like 680. Stop at today's low. Again, performance booster type trade, so keep size very low. And then I think it is too early to start shorting stuff again. Like I kind of covered yesterday, there wasn't really any A plus short setups. But I do want to keep a book of stocks that I think will be good shorts after a bounce. So that's something that we'll cover today. Amazon, very similar to the Oracle gap up, where we gapped up on big volume, had like 1 day up, and then we just saw massive distribution. And this kind of goes back to my thought process of just how weak the American economy is, and the average consumer in America is just getting weaker and weaker and weaker. And we've seen that across the board with any type of retail stocks. Amazon is kind of like a tech and retail, so I think it was kind of masking that until we had a chance to kind of take profits into a liquidity event. Now, big move down. We don't want to short into weakness after the market's already extended the downside. That's just like buying an extended stock to the upside. It's a no-go. But we bounced at the support gap, let this rally back through the 50-day, back through the 5-day, back through this gap zone, and then you'll have the 10 and the 20-day moving averages right around 233. That's the first point where I would start to get interested in. But a little bit higher at 235, you have another gap zone. That's really the spot that I would be looking to short. And to me, like this could be a breakout failure, just a bounce back, a lower high. But again, we're just starting to bounce in the market. The worst thing that you can do is get short way too quickly and then give up on all your shorts right as the market bounce is starting to lose some strength, and then we roll over. So patience, patience, patience on these shorts. BE, first test of the 50-day moving average, bounce there. This one, I'm less likely to take as an actual short, and just more, I want to see how energy names are getting handled in the market. But it bounced up into the gap zone at like 126 area. That would be the spot where I would look for the stock to get heavy, lose the daily VWAP, and then you can manage your risk against the closing price from earnings. This has already made a just monster move. So I do think that this needs like a full base before we get going again. But like I said earlier, first test of the 50-day moving average is typically a good bounce spot after making new highs. So again, never short into weakness, especially into a key moving average the first time you get there. Let it bounce back and then get heavy. Other consumer stocks that I think are going kind of entering their stage 4 downtrends. Netflix has been in a monster uptrend for multiple years here, from $17 pre-split to $133. Built out this like later stage base, gap down on earnings, had that stock split that like popped the stock up for like 1 day, but we rallied up into a resistance gap, failed there, and then today gap down under the 200-day moving average and then closed weak. Even after hours, this is trading at 110, 110.50. So it's barely bouncing with NVIDIA's earnings. Not that it should, but still some weakness in this name. I still don't want to short this on weakness because we're likely to get a market bounce. Let it rally back up into the 200-day moving average at this 113 spot. That would be the spot that I would start to look for weakness, and then you can manage your risk probably to the 50-day moving average. It's not a super fast moving stock. And if this does unwind, it will have plenty of room to unwind. Another stock that the average consumer in America has is Spotify. We have another monster move up from $72 up to $780, so a 10x over the last 2 years. bounced at the 200-day moving average, gap down on earnings, but into a support gap, rallied into the 200-day, and now getting weak. We don't want to short down here because we know that buying support has stepped in at this point and the market is extended to the downside. Let it rally back up into a declining 200-day moving average at 650-ish area. That would be the spot to get short versus the high of the day from November 13th. That would also probably line up with the 50-day moving average by that time, right around 770. Let me just go to a couple other retail names. Costco, we broke into our stage 4 downtrend that we've been tracking for a couple weeks yesterday. It was down 1.9%. Costco is not a very fast mover, so the daily chart looks pretty extreme. Price percent wise, it's not that extreme. Today was down another 2% at one point and then bounced back. So chances are we do get a snapback rally. I'd be looking for a rally into the previous support area, potential resistance right at the 910 to 915 area, because then you also have the 20-day EMA curling down to test that. That would be the short stop above the 50-day moving average and the resistance gap. Carvana, another, whoops, should have adjusted that. Carvana, another retail name that has already made just a monster move from $3.50 to $300, so 100x. Wild action. Definitely a stock to study, but has already made its move up. We are starting to see consumers like really weaken in America. We've started to see the stock have a character change where it gapped down on earnings the first time really in this uptrend that the gap down didn't immediately resolve to the upside. And we did see some strength today. So again, we don't want to short into a key moving average like the 200-day. Let it rally back up into a declining moving average or a resistance gap. So this spot at like 350, kind of between this previous high, the 50-day moving average and the resistance gap, that would be the spot that I would look to short and then manage my risk. 372 is a little wide. I would just use a 3 or 4% stop on this trade. And then last, we have QUBT. It's a quantum name, the weakest out of the quantum stocks, already kind of gave up all of yesterday's strength, down 6% today. Another failure at this resistance gap. So maybe that was the short spot. But with NVIDIA's earnings, what is it trading at now? $12. So a little gap up to the 10-day. What I would want to see is a rally back through the resistance gap, through yesterday's high, through the 200-day and the 20-day EMA, right around this 1350 area as the potential short, and then stop would be above the gap at $14. So that's going to be the daily market recap for Wednesday, November 19th. Thank you so much, NVIDIA, for saving the market. Hopefully we could at least see a couple day rally into like the 20-day or a little bit higher, maybe even the 618 gap here. What we don't want to see is a gap up and then just immediate selling. I kind of don't think we'll see that with like this 2 waves down and how bearish everyone got, but we'll see tomorrow. Hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.